All right, we are live. Greetings, fellow traders. I hope everybody had a great trading day today. So, wow, what a another day, right? Down 34 points, right? And again, a lot of it had to do with the gap, right? So let's just take a real quick look at the range. I mean, it was actually a pretty big range today too. So let's take a look and just see. So I mean, there were some opportunities today. So the range was 31 point range, right? But with a huge gap down, right? Big gap down today. So pretty interesting stuff. Let's go to the monthly chart and see where we're at in terms of state of the market. And oh, let me get this tweeted out here. Let's do that for a second. Let everybody get in, start clicking. So wow, Thursday, right? Thursday is a big day. Big day in the market. There's an 80% chance. There's always an 80% chance of the gap fading on a Thursday anyway. So Jay, what's going on? Hello, hello. All right, cool. Everybody's getting tuned in. So here we go. So just a quick look at the market. The reason that we look at the monthly chart, right, is that we like to get a bigger picture of it. And so now that we're learning all this Dow theory stuff, like we kind of can see a little bit more, right? Because when we like scroll out of it, right, we can see that the 50 moving average really served as like kind of this long time trend line, right, for a very long time. And they also just this kind of this purple bar right here, which is actual trend line too, from the 2009 lows, right, and then intersecting, the previous pivot point, from the top, and you can see it basically is kind of tested right where the 50 moving average is. 50 moving average is a little bit steeper here. That was tested here on that last December low, and then so forth. So anyway, that December low, Christmas reversal, inside month in January, right, and then from there that was broken, breakout to the upside, spinning top month, hammer month, right, tested a little bit lower, but ended up with a hammer, right, and then you had a Marabou's month. These are amazing, right, because you start at one level and you finish at the top, right, for the most part. A little bit of a shadow up there, but still pretty close. And then so this month, right, has been a pretty wild month, right, and so but interesting enough, not super unexpected, right? 1, 2, 3, 4 green months in a row, followed by potential red month. Month's not over yet. It could finish green, I suppose. 1, 2, 3 in a red month, right? 1, 2, 3, 4, 5 in a red month, right? 1, 2, 3, 4 in a red month. So I mean, when you start getting like 4 or 5 months in a row, right? You expect at least a red month after that. Anyway, so um, point is, came back down, tested this trend line here from the from that December low through January, and then it's basically kind of testing that area again, right? And what is really key in that area? That key in that area is this zone right here, right? So when you skip over a price and you gap, right? The reason that these get faded is because price likes to discover, right? It likes to test areas that it never was or wasn't in a while, right? I mean, here it was obviously it was in this range here, but when you gap over it, okay, it wants to kind of explore those levels, right? So eventually that they do get filled, and things happen in those areas. So, but it continued up right to the upside here on the weekly, then gave you this hanging man top at the upper Keltner channel, and then eventually gave you a tail fail here to the downside and gave you this spinning top, and then finally another spinning top last week. Now another spinning top this way. It could potentially be an inside week, and especially if the futures stay green into tomorrow, we might get a little bit of a push up and might finish with a true doji, right? To the end of the week. So we'll see how that ends up working out tomorrow. But yeah, so big gap down today. But the advantage is reversal. So gave a bit of a top bottoming tail here. So it's really up to the market now. I mean, it's already, so the bulls can continue to push, right? Can take this hammer to the upside, right? Get above that trend line, start filling this gap, and then eventually kind of work its way up to the cloud, and then try to break through the cloud and get to these highs here. So that's kind of where we're at. Intraday trading was interesting. It was tough. The majority of the move, to the downside was right at the open. So it's like, but I do want to show you this here. So this is today's pivot levels, which are provided to Positive Trends newsletter subscribers in the complimentary for now. But for now, if you become a member, right, of the newsletter, you'll be complimentary as long as you stay a member, right? So from this point, from here, but eventually, we'll break off and have some more fun, exciting things. But anyway, here's that gap fill line right here. So obviously, boom, gap right to that line. Hung out there and then just kept on testing those areas and then pushed to the downside, and then that was the kind of the start of it. Then it just kind of lost a little bit of steam, right? Kind of gave this a little bit of a bottoming tail here now at the at the monthly S2 level, right? And then it gave you a nice pop to the upside, retested the S2 level, tested the S1 level, to be reversal back to the upside. Huge move right at this really big pop after all this chop throughout the day. So it was a pretty wild move right there. So, but again, the big part of the move was right here at the open, and then right here at the close, right? And there's just a little bit of a move there, and then some chop for the rest of the day. So, it's a pretty interesting move. Let's take a look at the big picture. So real quick, this is what we're seeing. We are seeing this channel. See this yellow channel right here? That is a channel from 2018 where you got your double tops, right? Tested the bottom of it, broke through it, give you this bottom, right? Tested here, tested the pitchfork median line, right? Came up, tested pitchfork upper mid line, right? And then this gray line right here is your sort of your prior all-time high resistance area. We got new all-time highs and came right off of it, right? So in general, though, we'll see. I mean, things are still looking, like potentially there's there's some hope and all that stuff. So with futures up and all that. But anyway, basically all we did is we tested the pitchfork median line today, and we kind of talked about that too in Twitter. And of course we could get a pivot here and then start working its way back up. So it should be pretty interesting there. Okay, so kind of update on the market. Tomorrow's Friday, so just remember, I think using next week's options, right? So you don't get assigned stock or something like that, and then. And this way you're free over the weekend. Don't forget, Monday is a holiday. Monday is a market holiday. No trading on Monday. There might be a little bit of futures or something like that, but certainly not all day. And then, Forex might be open, but for the most part, all the U.S. markets, New York Stock Exchange, Nasdaq, and all that stuff is going to be closed for Memorial Day. So that's the scoop right there. Okay, so today just want to continue and conclude our exciting series, and it is exciting because you really get to start seeing things a little bit bigger picture of DOW theory. And so let me go ahead and pull that up right here. And it's going to go through. We'll do a quick review. So we've been doing an introduction to DOW theory. Okay, and so we'll just go through all these points again. I know I have Theorem 4 in here. There's actually 5, so we're gonna hit 4 and 5 today, and then we'll put everything together, and we'll try to run through all that stuff. So intro, right? Remember, DOW theory provides a context for understanding market movement and trend. And then, long story short, transports leading the industrials, and we'll finish up with that talk there. Charles Dow, founder, right? William Peter Hamilton worked for Dow and took the ideas forward, and then finally Robert Rhea made a fortune off of it, and then started to really write down the ideas and worked on this for a long time. We had the different hypotheses, right? The first hypothesis is that there's market manipulation, so big banks, big money, right, can push things around. I mean, even if you think about even like Citron, they're still manipulate, right? They release a big article, it pushes could push the stock up or down, and then they set their positions and they make money off of their moves and pushing money. Discount everything, right? Averages discount everything. That means like everything is priced into the markets, right? Theory is not infallible, which means it's not there could be, it's not infallible for beating the market, right? It's just it's an aid in speculation, and so we use that to help. So it's not universal laws, right? So like Elliott Wave claims to have universal laws, right? And the only thing about Elliott Wave is it's really challenging to know exactly what's happening while it's happening. Now there are some rules that could help with that, but ultimately you don't know what type of wave it is until it's over, right? So for the most part, but there are opportunities where you can kind of capitalize, and it does have predictive power. Theorem 1, right? We talked about the 3 moons in the markets, right? So up basically, so you have primary, secondary, and then you have the intraday fluctuations, right? Your primary movements, right, are basically saying that they, the big moves, could take a year to several years, smaller moves, less time, right? And there's no extent to how long the primary market can go. Elliott Wave sort of corresponds the same way with that. We also talked about yesterday, we talked about primary bear markets, okay? So we talked about abandonment of hopes, right? We talked about selling due to decreased business earnings, and then we also talked about distress selling, right? So we say, capitulation, basically. So, and then Theorem 4, this is what we're talking about today. We're gonna touch on Theorem 4, and then Theorem 5. I thought we already kind of hit Theorem 5 when we talked about secondary corrections, but we'll kind of just go through it real quick, and then talk about examples and all that stuff. So we started with bear markets, right? So today we're going to talk about bull markets. So a primary bull market is a broad upward movement interrupted by secondary reactions. So those are the secondary moves, those are your pullbacks, right? And averaging longer than 2 years. Okay. So during this time, stock prices advance because of demand created by both investment and speculative buying caused by improving business conditions and increased speculative activity. So there are 3 phases of a bull period. So the first, represented by reviving confidence in the future of business. Okay. The second is the response of the stock price to the known improvement in corporation earnings. And finally, the third is the period when speculation is rampant and inflation of stock prices apparent, a period when stocks are advanced on hopes and expectations, right? So hope, right, as my friend Scott likes to say, is not a strategy he likes to trade, right? So they're basically moved on all the hype they can get. So let's take a look and see. I actually don't need to sort of shrink that there. So let me pull up the market right here. All right, we'll go there. Okay, so let's just take a look. Let's go back to let's actually go back to the monthly chart and go back to 2009 real quick and just kind of review this. So basically the idea is, right, so remember we looked at the definition of the bear market, right, and we saw here that it lasted a certain amount of time, right, like about a year or so, a little bit over a year. Okay, the primary change trend, right, so here's your 50 moving average, right, the monthly chart broke below, right, tested it, retested it, and then pushed way below it, the upward trend, right? So the trend was broken, so now the trend has changed. Even broke through the cloud here too on the monthly. So that happened, right? So this we definitely identify this as a bear market, right? So what constitutes the end of the bear market and the bull market? Well, the first part is things start moving up again, right? So let's just go back to the definition. Okay, so the first phase, right? The first phase is reviving of confidence in the future of business. And so if you guys remember, some of you might not, some of you might be too young to remember, but back during this time, right, there was big bailouts happening, right? So big, too big to fail type stuff, right? So what that was trying to do is now, granted, this was propped up, right? But in general, it was trying to restore confidence in companies and in the market, right? So gas prices were super high, right? So they did whatever they could to get them lower, right? So people go back to work, right? Deals were made on cars, right? I mean, just all sorts of things were happening, right? So that it could start to push upward, right? So then we had a few moves here, right? So I mean, this is kind of the first stages, and one thing you can do is to show when this is over is you could have traded through all this stuff, but another thing you can do is just do a horizontal box, right? From that start that you knew you were in a bear market, right? So the start of the bear market, right? It took a certain amount of time and all your confirmation was there. Start of the bear market from here, right? Eventually it's going to break out of this box, right? And so when it does that, right, you pretty much tell it trend is trend has changed, right? So, but you could use the 50 moving average right here. The 50 moving average started curling up about this area here in 2012, and then we started working our way back up, right, all the way to where we are now. Okay, so so that just a couple tools that you can use. Those horizontal lines are important. So okay, so let's see. Let's go back here. All right, so the second is the response of stock prices to known improvement corporation earnings. Okay, well, we go back to here. Well, I mean, we had some bad earnings and, everything was, dismal and all that stuff. Well, companies started posting profits, right? People like Warren Buffett started making good deals, right? And then, companies started posting profits again. So things were moving up, right? And then finally, the final phase is, put this back up. Okay, the final phase is when speculation is rampant, inflation of stock prices, inflation apparent, and period when stocks are advanced in hopes expectations. So one thing we can do to look at that, right, is just to kind of compare. I mean, we don't have to be like super economists, but a couple things we can see is just, for example, Facebook, right? Facebook, of course they just posted record earnings and all that. But they started to get pretty inflated towards this top period. You started seeing some indications, right, that there were maybe some issues, right? So it was just going and going and going, and then so let's see here. That was that big thing here. So you go back here, right? Just going and going. It just kept hit this all-time high, right? And then you kind of looked at it. Remember, right before earnings, like Zuckerberg sold like like $250 million worth of stock, because even he knows this is getting overinflated, right? So when we start seeing stuff like that, you might start seeing you might be reaching highs, right? So it is possible, right? But so far, based on the last pullback, it was only secondary. Right? It didn't get past the monthly 50 moving average. So so just little things like that. So that's what you know. And then so let's talk about secondary real quick. What I do want to say is I forgot to mention yesterday, and I just want to pull it up, just kind of talk about this real quick. One kind of little it's not one of the theorems, but it's sort of like a takeaway from the deeper text of Dow theory, is that what happens is when you're starting a bear market, and this is kind of a little bit scary, right? So I mean, granted, we are still over the 50 moving average, but when you're starting a bear market, you retest the prior highs. Right, the prior all-time highs. And so that's what we did. So we had this pullback here, right? So that was your secondary move, and we did come back. But a lot of the idea is you retest those levels, but you don't quite break through it. And these did, right? So in a way, it sort of invalidates sort of like a guideline of Dow theory that we've broken through this level, right? So, and again, it's not infallible, but the idea is that because we've broken through this and we've set new all-time highs, it shows that possibly the bear market is not really beginning. And it's also kind of interesting too. They talk about volume. So they talk about, just for instance, like declining volumes. We go to the SPY. You can't really see volume on the SPX, but if we go to the SPY, one of the things that you look at is when you hit these all-time highs, you actually have kind of like decreasing and fading volume, right? So if you look up here as we're kind of reaching these levels, you kind of can kind of see the volume like tapering off, right? We had a couple spikes right here, right? But it's kind of tapering off, and then you start seeing big spikes on volume on down moves, right? So you have this down move here, big spike on volume, down move here, big spike on volume, and even here, right? Decreased volume on these new all-time highs, right? And every down move has been high volume, so. But the reality is, and because of computer trading and all that stuff, when there's a correction going on, the volume is always higher. You know what I mean? So it's really hard to use that as a true kind of standpoint and all that stuff. But sometimes here, you can hit like highs and you can see the volume was increasing as we came up here, and then it came back down. So I guess it's profit taking or whatever it is. But a couple of these pullbacks, big volume. So, but it was clearly in a bull trend, for a lot of these areas. But here, a little bit scary, right? Coming back up. So, but look at all this huge volume right here, too. And then eventually, right, just kind of tapered off a little bit and just started to drift its way back up. So there's always more volume on these down moves, is basically the kind of our takeaway from it. So anyway, back to this. Let's talk about real quick about Theorem 5, about secondary reaction. So this is the final theorem, and we'll wrap everything up. So secondary reaction is the purpose of the discussion. Secondary reaction is considered to be an important decline in a bull market or advance in a bear market, right? So the opposite. Usually lasting from 3 weeks to as many months. So during which intervals the price movement generally retraces from 33% to 66% of the primary price change since the termination of the last preceding secondary reaction. So retraces from 33 to 66% of the primary price change, okay, since the termination of the last preceding secondary reaction. So let's take a look at that real quick. So here we go. So let's go back to our monthly on the SPX. Let's see what they're talking about here. Okay, so basically, is this a secondary reaction? Well, let's go to the last secondary reaction. What was our last pullback to the 50-moving average? We're right here. Okay, so what was your price? What was your price range there? So remember what it says. So intervals the price movement generally retraces from 33 to 66 of the primary price change since the termination. So here was your secondary reaction back here. So what was the price change from here? Since here was, let's do a Fibonacci, because it just automatically does it for us. Let's go to the time. What was the all-time highs? Okay, so here we go. So wow, magic, right? So look at this. So from the the prior secondary price, your price range was from here, right? You could use this one, or you could use. I just go. Let me activate that real quick. Just pull that down to these guys. There, okay, about the same to the all-time highs, right? So that's your price difference from this low, which is almost the 50-moving average on the monthly, all the way up to the all-time highs. Right, and how much did it retrace? It retraced 50%. And that is between, right, if we look at this here, let's go back to this, that is between 33 and 66% of the primary price change since the last termination of the last preceding secondary action. Okay, so what are we looking at? We are very most likely looking at this last move, right? We're getting we're actually getting big earnings wins with a lot of things, Facebook, right, all that stuff. This looks like a secondary reaction, right? It's within that range, right? They didn't use Fibonacci's with DOW theory, but obviously Fibonacci has been around for centuries, but or for a very long time, right? So so that's the idea, right? So we pull back here, we pull back to the to the trend line, and that was it. Secondary reaction's over, guys. So and we've been experiencing it. We've been running this all the way up here, right, for the end of that. So now we're just kind of testing these levels, right? And we broke through it. In fact, one of the guidelines of it is that we've already broken the prior highs. If it didn't get to it, then right, it's kind of would kind of be saying like, okay, maybe this is the start of the bear market, right? But it got through it, right? And we're still holding the most recent kind of upward trend line too. So just something to look at there. So it's one example of having that secondary market. And then let's look at the second paragraph too real quick. Okay, these reactions are frequently erroneously assumed to represent a change of primary trend because obviously the first stage of a bull market must always coincide with a movement which might have been proved to have been merely a secondary reaction in a bear market. The contra being true after the peak has been attained in a bull market. And so that's basically all it's saying, right? So it's just saying that, hey, the, a bull market and a bear market have to start from somewhere, right? So a lot of people think, right, that this, bear market, is here, and then, some people might say it's still the bear market, and, until it's really basically proven otherwise, right? Until you basically take out those levels and the trend changes, right? So this 50 moving average here in the monthly is really key, right? And obviously your trend lines are really key too. And so at this point, you can kind of see, we're basically just retesting these highs. So it'll be interesting to see how this plays out over the next couple months, right? The next year, and just kind of see how it how the Dow theory kind of proves out for us. So real quick recap everything, putting everything all together is ultimately what it kind of comes down to is understanding trend, to get a big picture of trend, understand that there are secondary reactions and not panicking when they happen, but still taking advantage of it, right? Knowing what the potential is for retracements, so you can still trade tactically in certain levels. Knowing when you've reached potential levels of all-time highs, right? When we're getting kind of overextended, reaching upper Bollinger Band levels, things like that, right? Overbought levels that for a very long time they're finally starting to come over. Right? These are all tools that we could use, right? Because I mean, right now, if you look at the RSI, right? Let's go real quick. Let me just pull this up. Studies, RSI. So look at the RSI in the monthly, right? So we were overbought for a very long period of time here, right? So it just sort of starts to be your clues. Then coming back in, then we got overbought again, right? Start and end with a bearish divergence here, right, on the RSI on the monthly. So this is screaming we're reaching, like a peak here, right? Maybe it's time for a secondary reaction, right? And then and then it did. Then it pulled back. Now we're now we've got room to go. We got room back to go, right? Nowhere close to overbought at this point, even though we're at the same levels, right? We're nowhere close to being overbought, right? And then we were overbought for a very long time. This is a period here, from 2013 basically all the way to 2015, right? So you can be overbought for a very long time, right? So, but that's the idea. Is here you had this bearish divergence here. You had some big moves with volume and all that stuff. And so, but now, I mean, it's not like we're oversold, and we never got oversold here either, right? Barely even got halfway through the RSI. So just a little something to use, a couple little tools, we can use all of our knowledge that we have, and that's kind of the purpose of the whole thing. So, and then just remember, with Dow theory, right? The idea is, and what I'm going to do is I'm going to go ahead and I'm just going to pull up the Dow, the iShares Dow one more time. Okay, so here's your Dow, and what I'll do is I'll just keep the bar charts up, and I'll pull up the comparison chart. Let's see how it looks with the monthlies. Studies, add study, compare with, and we'll use the IYT, which is your transports. Remember, the transports lead the Dow for all intents and purposes. Okay, so here, right, you can see this big move here in the transports. Oh, why can't I get my squeeze that there? Okay. So we have these big lows here. 2010 to 9, right? So here's your lows in the transports, right? Clearly, this started kind of reach down here early, and then it really started to spike up, right? So here, transports started to come down. Then we had a secondary correction. Then they quickly reversed, spiked to the upside. Dow continued to work its way up, right? So you can see that the transports are leading, and right now the transports are basically pointing straight down. So can we get another potential pullback? Maybe. But we'll see. It just kind of gives us those clues. Right now, it's been pretty choppy up here, so it would be interesting to see direction. But the transfers are pointing down right now, so they could give us a kind of an idea that there might be some more downside coming ahead. So we'll see. We'll see how that all works out. But that's the idea. Those are the takeaways. That's Dow theory, and I hope you guys find that helpful. And for your trading in the future, just to kind of keep some context on the market. So at this point, if anybody has any questions or chart requests, please feel free to plug those into the chat window, and we'll get to many as we can, as we wrap up here. So let me just close this one thing here. Let me take these studies off, and we'll go through those. There, move the comparison. Boom. Go back to SPX. That's what we got. So, cool. Zoom back in. There we go. There's our monthly chart. Okay. So, yeah, let's see what we got. What's going on, everybody? Thanks for jumping in tonight. Really appreciate it. Jay, hello. Alpesh, what's going on? Good evening. Callsaw, what's going on? Mr. BH, thanks. This Dow theory is pretty cool. Can you do stuff like this in the future, such as wave theory? Yeah, totally. Callsaw. I've got, if you go to the YouTube channel, the free YouTube channel, and go through the playlists, I've created a whole playlist on Elliott wave theory. So you can check those out. So that I did a whole week on that, way back when. So I'm trying to make, these type of playlist type things. So educational stuff. But yeah, we'll definitely do more stuff like this in the future. So I thought it was fun. Just something just kind of, ties in everything together and gives everybody, kind of broader knowledge. And I think helps us all with our trading. Good stuff. So, NetFry, what's going on, man? Good to see you. Manoj, how are you? Good to see you. Thanks for jumping in. Nudie Poo, what's up? Can I do DNR? Yeah, let's take a look at DNR. Do not resuscitate. Just kidding. Let's see. Let's see what we got going on. Okay, so Denbury residential. All right, well, let's just we're here right now. Let's take a look at the monthly chart. It's looking a little rough, right? The monthly kind of put in a shooting star pattern last month off of volumetric resistance, right? And then clearly got some follow through here to the downside. It's got it's kind of these monthly support levels here, like kind of at $1.42. So keep that in mind. There's some volumetric support at 70 cents. Let's see. So yeah. So I mean, clearly, some big moves have been made here. There was a nice topping tail here. That was the key area. Right. It was actually a Pinocchio. So, excuse me. So here's your basically your topping tail, shooting star off of the upper Bollinger Band. Right. Nice down move. We got a nice down move here, and then look what it does. Like that. All it does is because most people would have their stops right up here on top of that topping tail. It just took those all out real quickly on some volume, and then came back down. That's called a Pinocchio. Right. It just kind of because it's a big long, like his nose, basically, and then it just kind of tricks everybody out, right? So it does that, and then it pushes the downside. So let's see though. I mean, you have the lower Bollinger Band here, kind of pointing to the downside, and then let's look at the daily. Yeah, big gap down, continue to push down. I'm just cascade waterfall type decline there. The question is there going to get any follow through anymore? And let's look at the daily chart again here. Let's see what we got. Yeah, it's kind of cheap, but we look at this pretty recently, so we got these fib families on it. Yeah, so I mean, it does look like it could test that 73-cent level. So if not, resistance here is at 257. If we can get over 257, could start filling some gaps above it. So definitely something very interesting. So nice one, Nudie Poo. Harvey, what's going on? Good to see you, man. Shirley, how are you? Thank you for jumping in. NetFry, great. Thanks, BH. No problem, my pleasure. Call Saul, can we take a minute to look at Roku? Oh, I know. I missed it like all week. It's like, and we traded it too recently. It was one of our swing trades that we did for in the newsletter for newsletter subscribers. And just we don't want to hold through earnings, right? Unless we have freebies. But my goodness, it just just totally rocked. Can we look at the monthly contracts? Yes. And then Tesla, just the fact that everyone is all of a sudden hawkish makes me want to get long here. I know exactly. So in fact, I know some people who did get long too. So. Let's see. So we've got Roku. Absolutely. Let's just kind of take a look at what it's been doing. Let's go to the monthly. Right. So monthly was tough to trade. It wasn't really actionable. I mean, in a way, it was a measured move. If you go with the real bodies, it's big push up, sideways, and then up again. Right. Tough to trade that off the monthly just because even if you try to go here, right, just a little bit tricky there. The weeklies though. Right? So this was a little bit better. You had this push out of the cloud, the weekly cloud, and then you had this hammer. And then we capitalized. I think we were here, for newsletter subscribers. I think we caught this. And then, hammer here, and then it just continued, right? Nice measured move to the upside, then pause, and then up again. I mean, has been just super, super strong. We looked at this when we were traded live like last Friday. You had this bull flag here, and then it breaks out of the 15 orb, to the upside. So really, really good stuff there. And then, so I mean, that is just, it's just pretty much on fire. So let's take a look here volumetrically, see how things are looking. I think it's above everything right now. Yeah, so it's above all its levels. So, I mean, as long as it keeps on taking out its highs, it is possible to get continuation, right? So, I mean, obviously, I like pullbacks, bull flags, especially in something that's super bullish like this one. It's just been just on fire, right? Just on fire. So pretty amazing stuff. Plus, Roku's pretty cool too. And then Tesla, yeah, I mean, same, I kind of have the same perspective on this as before. You do have support here, right? In this at the bottom of this congestion zone. So it's kind of 178 area, 178.79. And let's just take a look at the, it's finally starting. I mean, look at that big volume today. It is still holding it. The RSI is curling up here on the daily. Just close just above the lower Bollinger Band. It could give a shot. Weekly, again, it's not quite oversold yet. We do like oversold on the weekly below the Bollinger Band. It's super strong reversal trade. And then we can look at the Keltner channels on the weekly as well if you want. Let's just see where we're at. I believe it's still just continuing to push to the downside. And I'm sorry, I got so much stuff on here. My goodness, I don't even. There we go. So here, yeah, it is below the lower Keltner channel. I mean, so the trend is down. It's hard to do a reversion trade when you're below the lower Kelt, right? But anything could happen with Tesla. So anything could happen with it. So that is definitely for sure. So cool. Good stuff. Good stuff. Good stuff. Merritt, what's going on? How are you? Session, what's going on? Okay, so we got team. I don't know how they get team out of like Altassian, but Atlassian. Yeah. So, but anyway, it's all good. Ooh, inside week so far, right? That could be interesting going into next week if it holds up. Inside day, so we'll watch the high and the low potential breaks, right? You got your pitchfork levels here too, and then let's see. Let's pull up these levels. Oh, here we go again, guys. Okay, so we got these levels. 5 minutes. Okay. Yeah, it's we always volumetric. If anything, inside day, possible break to the downside, test pitchfork at 120, and then possibly back up after that. So, Costco, just basically waiting on earnings. We've been looking at it. I mean, it's a great stock to trade, but you got to catch it at the right time. So earnings is a good time to do it. Earnings are reporting end of the month, so basically like a week. So again, it's just been kind of like working on this megaphone, just kind of hanging out up here right now. So we'll see how earnings are. We'll look at a 15 orb on that one when it comes around. Starbucks down 84 cents today. Broke the this upward trend line that we were looking at the other day. Okay, so we're looking at this. So broke down below it, right? Might retest it. If it can't get above it, then we might see another push to the downside and get back to this this kind of pitchfork zone. So starting to show a change of trend in that one. And then STZ. Nice bull flag, measured move to the upside, right? We kind of tracking this, and now is just kind of just chopping around, right? So with STZ, it's hard to really do anything. You did have an inside day yesterday. It tried to get above it today, so that might be a little bit constructive. But yeah, I mean, if you did want to try long, you might have to hold it for a grueling amount of time, then have your stop here below like 202 or something like that. So depending on how if you're using options or not. But it might take some time here before it starts to break out again. Yeah. So call solid, check the playlist. Oh yeah, definitely go through those. I got Elliott Wave, very introductory on the Elliott Wave, but it's been pretty popular. So, but it does help you like start to learn about wave counts, impulsive waves, right, corrective waves, Fibonacci stuff and all that stuff. So it's okay. Session, let's look at dry. Our Darden that we've been looking at. So Darling Darden is oh, what happened? Where'd it go? Is pivoting off of the upper channel, right? So just keep that in mind. So nice pivot here, right? Probably might want to retest these levels here. It's kind of 113. I'm not saying jumping it short, but for the most part, these pivots here, it could give you an opportunity, maybe like a put spread or something like that could help you get there. Netfry Uber still holding, but sold one call. Okay, cool. Yeah, I think it got a couple like positive mentions today. I can't remember who's like some big bank said something like, oh, there's like so much potential left in it. And they just had some news tonight too about like doing like I don't know, like scooters or something like that in London. So, 1, 2, 3 down. Not lower lows yet. One more day down would actually be potential reversal, but I wouldn't let it get below this 39.50 level, right? 39.50, then it starts taking out that tail fail downside. I can start working on those pivots there. So, yeah, so pretty interesting stuff. You kind of had a Southern Doji here, but it was tough to trade. It's just these candles really aren't very compelling. So, but we shall see. We got earnings coming up too, so we got end of the month, so we could have a nice 15 orb on that one as well. Good stuff. Maybe entering if we can hold for or that 39.50. Absolutely. Access denied. What's going on? Awesome day today. Good. Can we go through Apple? Yeah, absolutely. So good. Yeah, there's a lot of good action today. Got a lot of good price action today. So yeah, that's why we love volatile markets, right? As day traders, because if we get the right setup and catch the right setup intraday, we can get we can have fun, make a quick move on it and good to go. So Apple, I want to be bullish on this. I've been trying to be bullish on it for a while. I've liked the the pullback, the consolidation. I liked yesterday that it was holding this Fibonacci arc, right? And it was kind of just below the cloud. And as you guys know, I like cloud breaks. So usually breakouts, but these breakdowns we look at sometimes in the newsletter as potential swings. But yesterday was, if you're just going straight with that, right? It was a good potential swing move. You would have been well. I think a couple of friends, were actually had some puts last night, so we're able to take advantage of that today. So there's Apple there. I mean, let's kind of look and see how it looks on the daily. Yeah, I mean, it just looks like it wants lower. I mean, it has to, oh my goodness. Excuse me. It just has to. I mean, it's not that I'm tired. It's just oxygen, right? So, but anyway, so here's the bottoming tail, and then so it could, if it could break today's highs, it might start filling the gap, and then get back in the arc like it probably wants to be at. If not, it's going to start retesting this pitchfork area and possibly lower. So, so we'll see. You know, futures are up right now, so it's possible. You know, Apple could lead the way tomorrow, and they might do a 190 pin on it or something like that. I don't know, maybe 180 or something. So, so we'll see. But yeah, looks pretty cool. In fact, while we're on this topic, before I go forward, I did get a special request here for Google. I got this through DM. I just want to get the timestamp right. So about 35. Okay, so Google question. Basically, it is they had puts overnight, and but you know didn't capture profit and or you know, they lost, you know, either broke even or didn't make as much or lost a little bit of money on the pullback. All right, so the idea is here, let's just kind of take a look at the daily on the candles. And, you know, so yesterday we had this test of this downward trend line, right? It also back tested over the cloud. So for whatever reason for entry, right, not, you know, you could try this short. So we try this short, right? So what we do is you know, Google, you got to look for open interest and you got to, you know, look at your time frame, how long you want to trade it. Right, so the idea is, let's just say you had the weeklies and you were just looking for an overnight gap and you made it, right? So, you know, you could look at, let's say you had the, do I have this pulled up right? Yeah. So let's just say you had the, say you were out of the money. I don't recommend out of the money for swing trades, you know, for overnights and all that stuff. But let's just say you did. Let's just say you had the 1100s, right? So let's take a look. Let's copy that chart. So yesterday, we'll see how it looks on the daily. We'll go here. Let's look at the 5-minute time frame. So we'll plug that option chart in. So I always recommend, if you guys are swinging options or trading options intraday, I always recommend pulling up. You can do it in the apps like TOS apps, or you know, a lot of you know, broker apps have this. You know, look at your option chart, right, and look at what's going on. So so these are the puts. So yesterday was Wednesday. So you can see here, if you got in, depending on what time you got in, you know, you could have got in, let's say, if you're at the close, right? You got in at 20 cents, okay? And this might have been, I don't know exactly which ones the requester was trading, but this looks like it makes sense, right? Okay, so 5-minute chart, right? You gap up here. So you got these at 20 cents, and you gapped up to 55 cents, okay? So the way I look at it, rule of thumb, and I call this the gift horse rule. So don't look a gift horse in the mouth, right? If you're like looking, you know, and you're trading this overnight, you've already held all that risk, and you double your money when you wake up in the morning, take the money, right? So, you know, yeah, it could go, you know, it could definitely go, but you know, take the money, right? So, so the idea is here. What you could do, another thing you could do is just go candle by candle, because I'm looking at the option chart right here. So we gapped up. So say we got it here at the end. Say we got it 20 cents. We gapped up to 55 cents. So we more than doubled. You could get it right there. You go your 5-minute bar and see where it closes. It closed here at 35 cents, right? You move your stop there, because if it was going to get continuation and follow through, right, it would start to do that on the next bar. And then if you get stopped out, you get stopped out. So you probably got tagged here for like 30 cents. So you made, you know, you still made good money, right? You made 10 cents. You almost made like, you know, 50% profit, right? So that's still pretty good, right? It's not a double, but it's still 50% profit. It's still good on any option trade, right? You know, it's you can brag about that, right? And so, but here I think this is what happened, right? It kind of came back down, probably took them out, and and hit another low here of I guess yesterday was 22. So basically just kind of stopped out at 20 cents. Right? Very, very possible. So that's annoying, right? You had this big win, you kind of opened up your more than double, then it kind of comes back on you. So really the reason is, you just have to think, based on size and based on risk, what you're expecting. But in an option trade, if you wake up the next morning and you're doubled, what you got, take advantage of that unless the market doesn't, support that. So, a little gift horse trade. Now, if you have 10 of them, right, and you double up, right, you could take a bunch off and have some freebies and just kind of let those ride a little bit, right? And then, then you don't have to worry about the little pullbacks because you've already made all your money. And then they ultimately went to like 65, so 3x trade on those. And it looks like they even went higher, right, all the way up to 90 cents. So that's pretty much the only way you can hold through all this garbage, right? Is to have some freebies left over that you can just let ride the best you can, right? And then just kind of follow the chart throughout the day. So anyway, I just kind of wanted to touch on that. So sorry I digress a little bit. So Good, good, good. All right, so let's see. So session spot. Let's take a look at spot. Da, 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 da. And I just want to thank everybody too for subscribing on YouTube. It's and all newsletter subscribers too. But yeah, almost at 1,000 subscribers on YouTube, so that's really great. Okay, so spot, yeah, not so good, right? So it had that. We looked at, I think we looked at this yesterday, right? So this big kind of big range bar to the downside got below the fib arc, and then we got continuation follow through the day. So so unfortunately, for if anybody was long, but that did give it kind of a down, but might still, two big volume days right there, might still get some follow through the downside. In fact, I'm going to add that to the watch list. That those look pretty weak, so I'm going to put that on the watch list here. So spot, nice one session. That's going on the watch list on the game plan. Let's just look real quick what Coop did. That was also an idea here from yesterday from subscribers. Yes, that was pretty good. So you had that topping tail there, and it was good for, obviously it came reverse back up. You still could have caught 4 points off of that. So whoever, I can't remember who mentioned Koopa last night for Coop, but that was a good one. So nice game plan idea. Good, Shirley. Awesome. And for anybody who's new here, check out Shirley's posts. Always has really, really cool stocks with cool levels. Very, very consistent. So let's pull those up right here. So let's look at Coke. Kind of the opposite of spot, right? Big green bar, got some follow through to the upside, right? So just watch out, just be careful here. This pitchfork, it's got to get out of that pitchfork. So that's basically a lot to say about that. If it can, then your levels are looking good. MDT, did they have earnings today? I saw a couple things. Let me see. Oh boy, where'd it go? MDT actually usually trades well on earnings. So let's just kind of look at the 15 orb on this one. I don't know. I didn't post it today, but it's a 15 orb trade. But yeah, so it was okay. Yeah, kind of blah. Inside bar, failed to break to the downside. Another inside bar, right? Kind of gave a spike here, 90, 60. And it's hard to trade with options. So, I mean, you have to use comment on this. But anyway, let's just take a look. Sorry, Shirley. All right, so yeah, but big day today. I mean, nice bottoming tail, nice volume into it and all that stuff. So, again, a break of today's highs, break at 91.79, could get further upside. And then, levels are good there. GIS. General Mills. Yeah, nice pop there. Could definitely get some follow through to the upside on that one. Yeah, I have no problem with it, with this one at all. All right, so just kind of holding that trend. So don't let it get below there. Other than that, looks good. XEL. Very nice. Sorry. So anyway, we've done the pitchfork on this one, right? So it did get over your pitchfork level, right? Kind of hit these highs, kind of these recent all-time highs, and then just be careful, pull back here, maybe 57, and then then I think you're kind of good after that. Robin, what's going on? Oh no, I'm glad you made it. Better late than never. So here we go. QQQ. Let's take a look. I like how you analyze the Qs. So here was the come on now. Yeah, and we're over there. How's that in auto zoom? Okay, I'm just kind of showing the action reaction line here, these green lines. So we have the action line, right? So our major pivot, right? Reaction line. So it might actually test that. And then we had this upward trend line that we looked at the other day, and now we're below it, right? So so just be careful, right? Caution is warranted. Even if we gap up, we might just gap up and test this this trend line, and then it comes back down, right? So that's kind of how these these kind of channels, these trend lines work. So just be careful of that. Roku, definitely. We talked about this a little bit earlier, but I know you're late, so let's just kind of look real quick. Roku's been super strong, right? Ever since this bull flag here after the big earnings gap, right? Broke through that, and then it's going to continue to the upside. So I mean, you could always try a breakout there. I don't like I don't like going just taking long at all-time highs unless you've got to stop at the low of the day, right? Because otherwise, you put 10-cent stop or 20-cent stop and you get stopped out. So, but yeah, it is going good. This is kind of one you can kind of even keep on the 15 orb list almost daily until it kind of calms down, right? It's because here, really, really strong stuff. You had inside bar on the 15, and that was your break right there. So 87.95, and then kind of really, pushed up there to 89.75. So nice 2-point move. Little pullback, you got to stomach that. Usually your stops are here anyway, 86, at the bottom of the inside bar. We did get a nice move, nice follow through to the upside. So, so good stuff on Roku. And what else? KO? I think we just looked at that 2 seconds ago. Not sure, but I'll do it anyway real quick. So KO, nice moves today, right? Nice moves yesterday, particularly. The only thing that scares me with it is that it's kind of like touching the top of this pitchfork level. So basically, this level here, where before it gapped down. So right, so think about it. If anybody was holding up through this and they got caught in this, they're still holding, right? And once it gets here, they might want to just go ahead and release their shares or whatever the case is. Might push it down a little bit. So just be careful at those pitchfork levels. So good stuff. Shirley, WEC. Oh, I'm sorry. Sorry, Robin. Let me pull up Diz. Got sidetracked there with yeah. Look at that. So I mean, it's kind of breaking down below that trend line, right? So there we go. It's testing this this sideways head and shoulders neckline, right? It's bearish if it stays below it. Look at how it came back up, right? Didn't want to get below it, but if it does, if it gets and stays below it, you're looking at potential test of this fib fan line, possible gap fill. So just be really, really careful here. So it's starting to get weak as it's getting under that trend line. So good stuff. Awesome. WEC. Wow, super strong. Nice energy stock. Just been a super uptrend for a long time. Let's see how it looks with a channel. It's kind of right there. So just be careful, Shirley, at that level. Right, might kind of reverse off it. Just watch that channel. So, and session. He's sneaking in one, right? Oh, I only want one. Here's Nike. Kind of like a little head and shoulders, right? Oh, come on. Shoulder, head, shoulder, neckline. Right, let's put that there for now. There's your neckline right there on the head and shoulders. So just be careful if it gets below 81, right? Might want to test lower. Surely VTR. Awesome. Yeah, it looks strong. Looks like it's still pushing the upside there. So that is a good thing. Let's see. I'll just draw a little channel on this anyway. Yeah. So even if it keeps going, right, it could break out of that volumetric level and still test like that. So you got channel and fib arc confluence on that, or fib fan confluence. So I like that. And then last but not least, I believe, peg. Again, still bullish. Look at it. It got through that congestion zone, just like we were saying. So as long as it stays above that, I think your levels are looking good. So Robin, agree with Kassal about more education, great stuff. Oh yeah, absolutely, yeah. So I try to find cool stuff like that that we can use and apply, and I'll probably even do like another Elliott Wave series. Maybe I'll even do like an advanced one too. Things like that. So hopefully that helps. Jay, what's going on, man? What's up? I'm in too deep. Can you please check OTLK penny stock? Oh man, I hope you're okay. OTLK. Oh, the pain. Goodness gracious. I feel you, bro. Let's see. Well, here's the good news. All right. So 196, this 196 level is long-term kind of volumetric level, right? Oh, look how thin that was back then. Okay, so it's holding this 196 level. You don't want it to get below it and stay below it, right? So, if anything, maybe a stop here, low at 175, 174. I don't know how the spreads are on this thing during the day. It did get nice volume here. It did break. That was your gap level right here. It did break 176 and pushed, right? And then pushed again the next day. So for almost a double, right? But then it pulled back, and so that happens sometimes, right? So it hit a major level, right? Hit a volumetric level. So so look for hopefully you can hold this level for you. If not, there's that gap below and all that stuff. So hopefully just bounce for you, and then you're good. Session, keep on sneaking one in. Pep. Yeah, I mean, still working its way up. Oh my goodness. A little bit of topping tail, all-time high type thing today, and then came off it a little bit. I mean, it might want to retest this 127 kind of level. If it does, it's still very bullish, so it might kind of push the upside. So, Merit Forever, thank you so much. I know it's been awesome. Like, we're having so much fun. We do this like every market night, and we're really growing, our community, and we've got the newsletter out, and it's just awesome. Once we get to 1,000 subscribers, I can do like a lot more cool stuff, like with editing on the videos. Like I can put fun things in it and stuff like that. So I'm just hoping, once we get to that level, I can do like a lot more. So that'll be fun. Harvey, awesome, great stuff. Always appreciate you, man, for tuning in. Yeah, Shirley, NetFry Shirley is great, and so are yours. If everybody doesn't follow NetFry on Twitter, it's at NetFry, ANTFRI, and he has awesome, really cool charts, and like he does this cool algorithmic stuff in there, and just kind of has got really great perspective on the market. Shirley, yep, awesome. Jay, always great stock pick. Shirley, yep, she is awesome. Session, there you are again, Smar. Let's see. I try to limit, the stocks, to like, 5 per person, that type of thing. But, if you sneak one in here and there, that's cool. So, holding this level, kind of this 40 level on this volumetric, really, really choppy zone. It's got to get above this fib fan, right? This 44, 44.50 before it can start going, right? Then next level is 46. Then it's back in the pitchfork, and then, then you might get some, some more action on that. So, awesome. I know, Jay. I'm sorry, man. No problem. My pleasure. Well, I hope that was helpful, guys. We kind of saw some cool stuff there with Google, how we pull up the actual option charts themselves. Those are very tradable, right? You can get a lot of setups in there too. Just so much stuff in the market, but we just try to piece everything together, and then we look for setups that we know, we can be consistent with. So when we get in a trade, we're confident with it. If it stops us out, it's no big deal because we know our risk first, right? And we stay safe so we can stay in the game. So I appreciate everybody. Thank you for tuning in. Thank you for support. Thank you for subscribing on YouTube. Thanks for following on Twitter. Thank you for subscribing to the newsletter. And everybody have a great night. And remember, tomorrow's Friday, and we have a long weekend. So I'll talk to you guys soon. Have a great night.